नमस्कार, मैं आपका दोस्त सीए मनमोहन जी, रजिस्टर्ड वैल्यूअर इन सिक्योरिटी एंड फाइनेंशियल एसेट्स फ्रॉम Mumbai. So we have discussed some aspects on the valuation of the family business in our previous two videos. Now we shall discuss the methods to value a family business. So there are several methods to value a family business, each with its own set of considerations and limitations. The choice of the method depends on the specific circumstances of the business and objective of the valuation. Means उसे अपनी जानकारी लेनी है, बिजनेस सेल करना है, बिजनेस बच्चों में बांटना है, बिजनेस से क्या उसकी एक्सपेक्टेशन है, वो गोइंग कंसर्न है, लिक्विडेशन के लिए है, बट वट एवर देयर आर लॉट ऑफ ऑब्जेक्टिव्स ऑफ द वैल्यूएशन ऑफ ए फैमिली बिजनेस. Regardless the method chosen, the goal is to provide an objective and comprehensive understanding of the business growth. So first of all is market approach. The market approach involves comparing the family business to similar businesses that have been sold or are listed in the sale in the share unit. This method relied on assumption that business in the same industry and market share similar characteristics and can be used as benchmark for determining the value of subject. Means you have a ready comparable company in nearly 90% of the parameters, and the other company is listed into the share market from where you are getting the valuation on day-to-day basis. So two commonly used techniques under the market approach are the guideline public company method and the guideline transaction method. So there are two approaches, that is guideline public company method and guideline transaction. So guideline public company method compares the family business to public trading company in the same industry. This method takes into account the various valuation multiples such as price to earning, price to sales, price to book valuations. So we can take one parameter or another parameter to compare the two companies. On the other hand, the guideline transaction method focuses on analyzing transactions on similar businesses that have been sold or acquired, or considering factors such as transaction size, industry, and the timings. Another is income approach. Income approach to the valuation is based on the present value of the expected future cash flow generated by the family business into the days to come, into the years to come. This method estimates the value of the business by calculating the present value of cash flow that the business is expected to generate in future and discounted at an appropriate discount rate to bring it down at the present status or the present value. These two techniques used under the income approach are the discounted cash flow method or the capitalization earning method. What is the best suited to that is adopted. DCM method involves projecting the company's cash flow over a specific period, discounting them back to the present value, and then adding the present value of the terminal value at the end of the projection. While capitalization of earning methods involves estimating the company's future needs, which are then divided by a capitalization rate that reflects the risk associated with the investment. So these two techniques are inserted or taken care of to the asset-based approach. Third is that is this approach focuses on the net assets value of the family business, which is calculated by subtracting the company's total liability on its total assets. This matter particularly relevant for the business with significant tangible assets such as real estate, machinery, or inventory. The asset-based approach can be used under two main techniques: the adjusted net asset method and the liquidation value. So the net adjusted asset method involves adjusting the company's assets and liability to their fair market value, which may differ from book value recorded in the financial statements. So definitely the assets are in the asset side of the balance sheet are revalued and the considered as a market value, which may be different to the book value. The method provides a more accurate presentation of the company net asset value, taking account factors such as depreciation, obsolescence, and appreciation of the assets. तो रियल टाइम वैल्यू क्या है उन एसेट्स की वही कंसीडर की जाती है. Liquidation value method estimates the net proceeds that would be received of the family business if it were sold off and the assets are liquidated. This method is often used when business is in financial distress or when its ongoing concern operations are not generating sufficient. Means the business is in stress. The liquidation value method considers factors such as cost associated with selling assets, settling liabilities, any potential discounts or premiums applied during the liquidation process. So, the factors to be considered in the family business valuation we shall discuss in the next. आपके पेशेंस के लिए बहुत बहुत धन्यवाद.